And it's time for 55 minutes around the world of business. Welcome to Business Incorporated. Here's what's coming your way in the next 55 minutes. Some citizens in Uganda want the shilling to be declared illegal. And debt distress persists in Kenya in spite of the Eurobond offer. And back here in Nigeria, we look at the price movement of cement in the past few months. Welcome to the program. I'm Ini John Mekwa. We'll start from the global space right now, looking at global oil prices, which rose for a second day on Thursday on expectations that demand in the United States, which is the world's biggest oil consumer, will improve as refineries try to return to service after outages and as the dollar also weakened. Brent futures rose 17 cents. That's about 0.2% to $83.20 a barrel. U.S. West Texas Intermediate crude for April also went up 19 cents. That's about 0.2% to $78.10 a barrel. Oil prices rose 1% on Wednesday. Crude stocks went up also 7.17 million barrels in the week ended February the 16th. That's according to American Petroleum Institute figures. Also, gasoline stockpiles rose while distillate fuel inventories declined. U.S. crude inventories have climbed amid outages at large refineries that have left utilization rate at the lowest level in 2 years, though the plants are resuming. For instance, BP's 435,000 barrels per day refinery in Indiana, which is the largest in the United States Midwest, is set to return to full production in March after a power outage that happened in February the 1st. Now, Total Energies, which has a capacity of 288,000 barrels, is in Port Arthur in Texas, is also working to complete a restart, though it is still operating minimally following a weather-related power outage. Analysts expect U.S. refinery run rates to have risen to 81.5% last week from 80.6% of total capacity in the previous week. Investors will also keep an eye on the official inventory data from the United States Energy Information Administration that's due later on today, delayed by 1 day because of that president's holiday that we had on Monday. Crude was also supported by a weaker U.S. dollar, which makes oil less expensive for traders holding other currencies. Still in the global space now, U.S. corn futures fell to a 3-year low, nearing a $4 a bushel as ample domestic grain supplies and strong South American crop prospect weighed on sentiment. Soybeans followed corn, went lower, retreating after rallies a day earlier, and wheat ended mostly weaker. Chicago Board of Trade March corn settled down at $7.34 or 1.85%. That's down at $4.11 per bushel after I hit a $4.10, the lowest since November 2020 on a continuous chart. The most active CVI, CBOT March soybeans, also ended down 18.25 cents at $11.60 for 3/4 of a bushel. Corn futures set the tone, and some analysts attribute the sell-off in corn to commodity funds adding to their already large, while others cited selling by farmers unloading grain stored from the 2023 harvest. Soybeans declined as the harvest progressed in Brazil, even as analysts debate the size of South American crops. Meanwhile, expected rainfall over the next few days in Argentina's Pampas region will likely boost the 2023-2024 soybean and corn crops, according to Buenos Aires Grains Exchange. In the metals market now, gold prices inched up on Wednesday as the Middle East conflict boosted safe haven demand, while minutes of the latest Federal Reserve meeting dampened hopes for an early interest rate cut. Spot gold was up 0.1% at $2,026.21 per ounce. Prices climbed to their highest since February the 9th earlier in the session. U.S. gold futures settled 0.3% lower at $2,034.30. There's still more tension because of that Israel-Hamas war, which is keeping a floor under the gold market. And this is the observation of some market traders. The Iran-aligned Houthis persisted in their attacks on shipping lanes in the Red Sea and Bab al-Mandab Strait, with at least 4 more vessels hit by drone and missile strikes. Bullion is still considered a hedge against economic and geopolitical uncertainties, while higher interest rates reduce the appeal of holding non-yielding gold. Spot platinum lost 2% at $882.76 per ounce, and palladium also fell 2.8% to $947.85 per ounce, and silver was down 0.3% at $22.92 per ounce. We come here to Nigeria, where Bureau de Change operators in Abuja have been reacting to that latest raid on currency dealers by officials of the Economic and Financial Crimes Commission, that's the EFCC, describing it as a welcome development. The chairman of operators in the Wuse Zone 4 area of the nation's capital said the association is ready to work with the government task force to stabilize the foreign exchange markets.
Wuse Zone 4 area in Abuja is a hub of currency trading as it houses several Bureau de Change offices where customers and traders buy and sell foreign currencies. The area is dominated by these roadside currency traders, popularly called black marketers. Many of them often work for the Bureau de Change operators who are licensed by the Central Bank of Nigeria. The licensed operators also have their offices in the same area. Earlier in the week, officials of the Economic and Financial Crimes Commission, EFCC, raided the area, leading to a clash as well as the arrest of some people. A few days after the raid, some of the traders are back on the road looking for customers. Although the EFCC is yet to comment on Monday's operations, a statement from the Commission says in part, the EFCC has raised a special task force in all its zonal commands for the enforcement of extant laws against currency mutilation and dollarization of the economy. A similar statement from the Office of the National Security Advisor confirms efforts by the federal government to clamp down on currency racketeering. The statement says, in a concerted effort to safeguard Nigeria's foreign exchange market and combat speculative activities, the Office of the National Security Advisor, ONSA, and the Central Bank of Nigeria, CBN, are joining forces to address challenges impacting the nation's economic stability.
Thanks a lot. Thanks a lot.
However, federal lawmakers believe their approach is not proper.
On the foreign exchange, when I saw the video of what happened yesterday at Zone 4, I laughed and I cried at the same time. I laughed because in 21st century, a great country like Nigeria should not embark on such a thing.
Nevertheless, the Bureau de Change operators in the area welcome the actions of the government.
As a registered and licensed operators of BDCs, we have our own saboteurs. They might come and we might not know. And maybe they are the ones that are making all these speculations. So we have our own speculators here that are making things very difficult for us. So we'll be looking for this opportunity. So for us now, like I said, it's a welcome development. For the people outside the market, we're advising them that they should please, because these dollars, there is no way to be going up again. There is no way. We will try our best. We will try our best. We will help the government and we will help all the people in Nigeria to see we bring it down honestly.
A financial expert, Mr. Paul Alaje, thinks the government can explore better options to tackle the current foreign exchange challenges.
The central bank must urgently issue a circular that all operators, whether on the streets, in the room, in the bank, in an office, all dollar transactions must be digitalized. We will know if truly subnational are invading the market, because it will be practically impossible for you to do anything. That one, we will now know if round tripping is going on or not.
The Nigeria currency has been on a free fall against the dollar and other foreign currencies, and the government is determined to stop the slide, especially because of the impact on the prices of goods and services.
And so earlier today, during Business Morning, we did speak to the Chief Executive Officer of Financial Derivatives Company, Economist, Mr. Bismarck Rewani, to get his reaction on some of those points raised in that report, especially with the promise of the BDCs and the approach of the federal government using task force to raid BDCs.
What is the offense that they have committed in the first place? I heard something about dollar racketeering, mutilation of notes and all that. Is that the problem? And I heard the BDC man saying that we'll ensure that the rate will come down. But they want to ensure that the rate went up in the first place. Markets work. When the supply is in excess of demand, the value of that currency appreciates. When the demand is in excess of the supply, currency depreciates. This doesn't happen in other countries, raiding markets and all of that. It's not. You're only making it more difficult because there's what we call the illicit premium in a currency. Leave them to do what they want. A speculator can make money, and a speculator definitely can and will lose money. So what we are trying to achieve here is to get a currency that is misaligned from its fair value. And the only way you can bring a currency in alignment with its fair value is to address the fundamental issues that are attacking that currency. So there's speculation, there's panic, there's fear, there's round tripping, there's all of these things. Those are as a result of market distortions. So let's not run away from the fact that this currency is now an embattled currency. And people have got to the point where there's not an effective price. Even if today it's trading at 1,915 naira to a dollar, 2,300 naira to a pound. But when you ask for the currency, you can't find it because they do not know whether you're an agent or law enforcement agent or not. Allow things settle down, and the true value of the currency will emerge.
It's an ongoing conversation right there. But let's find out what all of this is doing to the financial markets every day. Here we give you the numbers from the NGX, from the fixed income. We see a lot of effort by the federal government to mop up a lot of this currency, well, the naira, not the dollar in this case, through the fixed income market. Let's have a holistic conversation on the impact of this high cost of living and devaluation of the naira on the financial market in Nigeria. Speaking with us is Director, Research and Strategy with Chapel Hill Denham, Mr. Tajuddin Ibrahim. Mr. Ibrahim, good afternoon. Been a while. Good to have you on the show again.
Yes, good afternoon. Thank you so much for having me on.
Great. So do paint the picture for us. The government, the CBN, has been issuing circulars. We've seen a lot of pronouncements. We've heard a lot of things just to get the naira back on track. But it seems a lot of this has failed to hit the target, and we still see the naira falling, even though we did see a slight recovery at the close of trade yesterday. But what is this doing to the financial market? What is it doing to investors' reaction in the markets?
So to start with, thank you for having me on the show. So the way it is impacting the financial market is, let me say, in two ways. The first is that when we are looking at the financial market and the focus is on dollar-denominated investments, we realize that such investments are performing well above of the performance of naira-denominated investments. And what do I mean by that? I mean, if you are looking at the returns on Eurobonds, you will find them to be more compelling in naira terms. The return in dollars those returns look like something like 1% or even slightly negative in dollar terms. But when you convert those returns to naira, you will realize that it is about 30 to 40% return in US dollar terms. And in this case, I am even using the official market rate. So because of the 30 to 40% devaluation that we have seen in the currency this year, we notice that dollar-denominated investments are outperforming the other asset classes on a year-to-date basis. If you take the second view at the performance of securities in the market, it is to look at which are the companies that have dollar inputs. Either they have raw materials that they have to buy via US dollars, or they have dollar loan that they have in their books. Those kind of instruments are not doing well in the market. And a very good example are the consumer companies in Nigeria that have to import wheat and they have to utilize US dollars. They are facing challenges as we speak Good example of them are those that have to import raw milk in their production. They are also seeing the same challenge. Another example are those that have dollar loan or debt exposure that are denominated in dollars. They are also facing challenges. So if you are buying into the securities of any of those companies, you are buying into securities that are losing value because of the valuation and the volatility that we are seeing in the foreign currency market. So that is the way the asset classes are behaving in terms of the development we are seeing in the foreign currency market.
Yeah, but we still see our bonds. I know we had an auction last week, and I think it was oversubscribed. We had another one yesterday. I haven't really followed the result of that. And obviously, these are Nigeria. So does this portray what's going on with the Naira, or they are separate?
They are not, largely speaking, separate. In fact, they are related, because what we are seeing is a situation where the CBN is looking to stabilize the Naira, and that stabilization calls for substantially high interest rates to ensure that our interest rates are elevated to the level that it will interest foreign investors to bring in new money. And I say new money because as we speak, we have foreign investors in the market. Those are old money that have not even been able to go out completely. We need new money to flow into the Nigerian market, and those new money externally will not flow in until we have substantially high interest rates on fixed income instruments, on money market instruments. So what the government and the central bank have been doing is to allow for elevated interest rates on Naira-denominated assets, such as the Nigerian local bonds, such as the Nigerian treasury bills. And high interest rates are reflected in the last auction that we had on the bond market, where we had the 10-year bond printing at 19% yield. Yesterday also there was a treasury bill auction where we had the 1-year treasury bill printing at 19% discount rate, and that looks like about 23-24%, when you are looking at it on a true yield basis. It is those level of high interest rates over time that can interest foreign investors to bring in US dollars, which at that point will help us to stabilize our currency. So what is happening in the Naira market is reflective of what is happening in the foreign currency market, because broadly speaking, as we speak, we need elevated interest rates to attract more foreign investors into the market.
So I think for like 2 days now or so, we've seen the dollar weaken. Does this help our situation? We've seen it affect, of course, things like demand for oil, because oil becomes cheaper, for gold, it becomes cheaper, and all of that. Do we see a weakening dollar, having impacts on us, Nigeria?
Naturally speaking, a weaker dollar should be positive, for our currency, and you will see that being positive for our currency only in an environment or in a market where we have, number one, transparency. Number two, where we have the required level of discipline. Number three, in an environment where we have a market with the required level of liquidity in terms of supply. You will see stability or appreciation of your currency when the US dollar weakens in a market where you have no speculation on the currency. What we are seeing currently is a case where we have a high level of speculation in the currency market. So even if the US dollar weakens, it is not going to reflect on our Nigerian Naira. And we need to restore confidence back into the market before we will see that kind of positive development. I mean, a case where when the US dollar weakens, our own Naira will strengthen. Instead of strengthening, it was even becoming weaker at the trade of yesterday and 2 days ago. What is very important going forward is for us to see an increase in supply. Yesterday, the CBN was in the market to sell about $85 million into the banks at the official market. That kind of a development is encouraging, but it is not enough to stabilize the currency. We need it to be a little, or in fact, substantially higher than that kind of a level. Maybe when we talk about $500 million, $300 million intervention in a day, then there will be hope around recovery of the currency.
Yeah, but I guess the question would be, where do we expect the CBN to get this $500 million? Because the CBN does not print dollars.
It does not print the US dollars, but there are sources that the CBN and indeed the fiscal authority really need to monitor to ensure that those channels continue to supply US dollars for us. Number one is the crude oil sales that we have in this country. NNPC needs to be a lot more transparent. They need to really work together with the Central Bank of Nigeria to ensure that there is high level of transparency, and also ensure that the inflows from US dollars get into the CBN and support the ability of the CBN to supply US dollars to the foreign currency market. There is no other way that we can get the US dollars from other than, in this case, to receive US dollars via export. If we leave export, the other channel to get US dollar inflow into the economy is the portfolio channel. And I talked about it earlier. That will require elevated interest rates, because it is via that foreign investors will see what we call carry trade. Carry trade in the market is a situation where you have low interest rates in advanced economies, and those low interest rates will encourage foreign investors to look for frontier markets such as Nigeria to bring their foreign currency to buy and earn high interest rates. At that point, there will be need for the depreciation of the currency to be minimal, maybe 5 to 10%. And then whatever increase they can enjoy above it is what we call carry trade. There is need for stability for them to be encouraged to want to tap into carry trade opportunity in Nigeria. And the starting point, of course, is elevated interest rates. That's the second channel. The third channel to my mind is the CBN and the fiscal authority can consider raising debt. The Eurobond market is not where we can possibly go in the immediate term, but in the second half of the year, chances are that there will be accommodative monetary policy stance in the US, interest rates in that environment will be much lower. That will give us the room to begin to think about floating Eurobonds in the second half. That is the next channel I am looking at. The fourth or possibly third channel to my mind is the domiciliary account that we have in the country. The government has spoken to possible products that will address that. If we have such a product, such like we have the Naira saving bonds, we can have the dollar saving bonds as well. And it will be targeted at domestic investors that have US dollars to invest. With that, we can also get some inflows into the market to stabilize our currency. Those are my views.
Sounds interesting, but to get Nigerians to get their dollar to invest in the government, some people might be suspicious. Are you sure this is not a trap by the government to know how much we have? But
it shouldn't be a trap, but the reality is that the dollar sitting in our domiciliary account does not earn anything. Banks do not give any interest on domiciliary balances, unlike the Naira balances. That is the standpoint I think many Nigerians should be viewing it from.
All right, Mr. Ibrahim, just before we let you go, just briefly now, you've used the word transparency like 3 times, since you started talking. What are those areas where you think transparency is lacking in the management of these FX rates and currency in the country?
So I think the starting point, honestly speaking, is from the supply side, right? And that supply side is looking at the NNPC in this case, on several occasions, we have seen, high-profile individuals in this country talk about NNPC, where are the dollars? If that question, is not answered, and we begin to see inflow from the NNPC to the CBN as the dollar receipt, from the crude oil sales by the country, then we cannot really move anywhere, because that seems to be like the major and possibly the only source of foreign currency income for the country, because it accounts for well over 90% of what flows in terms of our FX. The next thing speaks to the demand side, and on the demand side, many Nigerians are speculating on the currency. So there is also a need for the sensitization of the public around that. If you do not need to transact in US dollars, why are you speculating? Because no matter whatever the government does, whatever the fiscal authority or the central bank does, if Nigerians keep to speculate on this currency, it is unlikely that we will see stability as soon as we should. But who is going to bear the impact? Everybody is going to bear the impact. Everybody is going to feel the impact, because it is going to come in form of inflation. Because whatever naira you hold as we speak in dollar terms, over time, you will be holding a lower value of it. Can everybody convert their naira to dollars? No, it is not going to happen. So if we do reduce speculation on the demand side, it can also help us. Nowhere in the world will you see in a sane environment their citizens speculating on their national currency because of the negative impact it will have. It will not be the impact of the speculator alone, but it will be the impact of almost all the citizens of that country.
All right, Mr. Tajuddin Ibrahim, except in Uganda, where the citizens are asking the courts to declare their own currency illegal. Very interesting one. Well, thank you so much for your views, Director, Research and Strategy with Chapel Hill, Denham. All right, now let's head to the market and see how that's doing intraday. The NGX is still sustaining that rebound, even though it's light at this time. If we could have the numbers right there, 0.04 in the green is what we have for the NGX at 101,398.13 at intraday. And it's also green for the JSE of South Africa. They gained 0.26%, but they have not regained that 74,000 yet, 73,215.88 at intraday for South Africa. I wonder if this will be sustained now. There's still a lot of action going on in the fixed income market. But let's see other market now. EGX is also in the green today. The Africa market seems to be in the green, 0.04%, 29,305.05. Kenya, however, well, at least, they did some magic movement there. We've gone from 91 to 92.19, even though at the close of trade yesterday, they dropped slightly, 0.06%. We look forward to when we'll have 3 digits back in the Kenya exchange. We head to the Middle East and see Abu Dhabi is in the red, 0.68%, 9,324.93. Dubai also in the red. This is just a flip of what we have in the African market, 0.45% what we have for Abu Dhabi. Saudi Arabia, it's in the green, 0.22%, and Qatar is, however, in the red, 0.60% for intraday. We move to the United States, where S&P 500 futures rose, boosted by a jump in NVIDIA. NVIDIA is moving the market again. It did that yesterday. The shares, as the chip giant posted record revenue and issued upbeat guidance. S&P 500 futures, look at it right there. Okay, to start with the Dow Jones, it's 0.24% in the green, 38,771. S&P 500, very green, 1.12 at 5,052. And then NASDAQ for the technology guys. Remember, Nigeria is also working. We're looking at the NGX for when we'll have our own tech counter right there, or index to capture activities right there. Of course, we need more companies to come So Nasdaq features very green, very, very green, 1.96%. The Nasdaq Composite could see a rebound from a 3-day losing streak. So far this week, the tech-heavy giant group we've seen there have been moving positively. Let's go to Asia, where the market has closed. The Nikkei is doing it again. Last week, they regained the 38,000, after about 30 years or so. Now we see they've even hit 39,000. Congratulations to Nikkei. 39,098, up 2.19%. After that holiday right there in Asia, we see that demand is coming up, and then the markets are boosting, getting a lot of investors' attention and interest. Kospi is also in the green, 0.41% at 2,664.27. Hang Seng also in the green, 1.45% right there at 16,742.95. If we look at the other markets, we see Australia is marginally up and Shanghai very up, 1.27% at 2,988.36. Now let's head over to London, see the market there and some other issues. One of them, a little bird, told me that the Speaker of the House may be under fire. Well, I don't know. Juliana knows better. Hi, Juliana. Good afternoon. What's happening in the House?
Yeah, I know I do say this often, Innie, but honestly, yesterday was box office viewing in the Palace of Westminster. It shouldn't have been that way. It was supposed to be a typical day's proceedings, but unfortunately, due to a break in centuries-old protocol, it has led to a political storm, and the Speaker of the House, Sir Lindsay Hoyle, who has had that position for almost 5 years now, he is facing mounting pressure from, to be fair, all sides of the House to resign. Now, it is very complicated and complex because British constitutional laws are, you've got to be very adverse in British politics to understand the absolute detail. But to give you a kind of broad overview of what happened, is that there was a vote supposed to taking place this week for MPs to decide whether or not there should be an immediate ceasefire in Gaza. Now, as to be expected, that topic alone, because it is so emotionally driven, we were going to expect some testy exchanges. And that motion to ask for a vote was put by the third largest party in the House, which is the Scottish National Party. If you are not government, you have 3 opportunities every year to basically have your say and your day and your debate. And that was the first opportunity of the year for the Scottish National Party to put through their concerns, and they are calling for an immediate ceasefire. Now, the issue is that the Speaker of the House was once a Labour MP, and there was some feeling that perhaps the Labour Party, led by Sir Keir Starmer, who is expected to be the next Prime Minister, that the Labour Party would lose that vote because there are so many Labour MPs, including British Nigerian MP Kate Osama, who was sacked a couple of weeks ago for calling for a ceasefire, that he would lose that vote and that Labour MPs would vote for a ceasefire. Now, the issue is that Sir Keir Starmer had a private meeting with the Speaker of the House asking him to amend the text of the motion so that Labour could make some amendments saying, yes, we're calling for a ceasefire, but only if Hamas released the hostages. Now, that led to an absolute firestorm in the House yesterday. Basically, there was no vote. The Conservative Party were absolutely furious because, of course, they believe that Lindsay Hoyle is no longer impartial and that his Labour leanings were put on full display. The SNP, the Scottish Party, were furious because they believed that their day, which they only get 3 days a year, was completely overshadowed by Labour. So now we have this political storm. We currently have a pretty raging debate ongoing in the Palace of Westminster at the moment, which is being led by the leader of the Commons, Penny Mordaunt, basically deciding how long the Speaker has left. He says he is not going to be resigning, that he will be continuing as normal. We're expecting him to deliver some sort of statement. He did apologise to the House yesterday, but then kind of walked off. It was very, very dramatic. There were tears and lots of booing and shouting. But yeah, so about 60 MPs, very senior, including Sir Ian Brady, who's the chairman of the very influential 1922 committee. They've asked for the Speaker to hand in his resignation. Why does this matter? Because we are in an election year. The Conservatives have been in power for 12 or 13 years. They are on their way out. And so anything that they can do to stop that and shift the vote, they are going to hold on to. So this has become a very political moment. We're supposed to be talking about peace, but it descended into war in the Palace of Westminster yesterday.
How unfortunate, and sounds really complicated right there with all the emotions and the politics all come together. But let's do a bit of business and see, I think, some good news. Business activity across the UK private sector in February expanded, and that's the fourth time consecutive month.
Yeah, that's absolutely right. This is good news for Prime Minister Rishi Sunak. In fact, I suppose this political storm is good news for him as well, because for once it doesn't involve him at the centre. So, yeah, two pieces of good news for the Prime Minister. We know, of course, that we are in a semi-shallow recession, according to data from the last quarter of 2023. But according to the S&P Global Index PMI flash indices, which, of course, we forensically look at because it provides an up-to-date minute analysis of the UK economy. And we are very much a services economy. It contributes 80% to Britain's overall GDP output. And it is shown that, as you quite rightly said, for the fourth consecutive month in February, that the index has risen. It rose from 52.9 in January to 53.3 in February. Anything above 50 represents an expansion. So this is a good thing. So already we've got economists from across the country basically saying that, you know, there is nothing to fear, that the UK is no longer in a recession. Of course, the S&P also does a survey, and in conducting discussions with bosses across the UK, they are optimistic, at least. You know, they are starting to feel that, you know, people are spending. We have seen from UK unemployment data that, you know, even private sector pay is on the increase. And, you know, if you're not a saver, if you've got more money in your back pocket, you're going to spend it. And that is boosting overall growth. So, yeah, that is pretty good news. We're not out of the woods yet. Of course, inflation's still quite high at 5.1%, and the cost of living is still really hurting people. But at least, according to the data, we are on our way out of a recession and perhaps to growth, which is, of course, so desperately needed. Yeah,
needed everywhere. We need it more in Nigeria, Juliana. But let's head to the markets and see how that's doing at this time.
You do. I don't actually have a full breakdown of the markets, although I did have a sneak peek before I got into the studio, and it does show that the UK Blue Chip Index is in positive territory at intraday, really boosted by that PMI data, having a forensic look at the UK economy. I did speak to you yesterday, Innie, about HSBC, but the city is still talking about HSBC, which, of course, is a huge lender in the UK with significant presence across mainland China. Now, despite the fact that they posted record-breaking profits for the year to the end of 2023, they suffered their worst share loss yesterday on the UK Blue Chip Index. I think their shares at one point were falling between 8.5 and 9.5%, and that's because they had a $3 million impairment charge from some stake they own in a Chinese communications bank. I think there are major concerns, particularly after the fall of Evergrande, about the state of the Chinese economy. Of course, it is so opaque when it comes to retrieving data out of the communist nation. But that's all I have for you, unfortunately. I don't have a specific breakdown of the numbers.
All right, Juliana, we'll take what you have. Thank you. Enjoy the rest of your day. All right, well, unlike the UK right there, the German government has slashed its growth forecast for 2024. It expects the economy to grow much less than previously forecast. So I wonder why. But Ekram joins us now to give us the details of why we have this high. Ekram, so what's going on? Why this slash of the forecast?
Thanks for having me, Ini. Weak global demand, geopolitical uncertainty, and persistently high inflation dashed hopes for a swift rebound in the German economy. Now the German government expects the economy to grow 0.2% this year, far less than a previously forecast 1.3%. The German government's annual economic report said that the German economy continues to find itself in difficult waters at the beginning of the year. Europe's largest economy shrank by 0.3% last year and is broadly expected to enter another technical recession in the first quarter of this year. Economy Minister Robert Habeck said Germany is coming out of the crisis more slowly than hoped.
Why, Ekram? Because, we just spoke to our correspondent in the UK, same zone, and they are recovering. Why is Germany's economy struggling?
Well, the annual economic report listed high inflation and the resulting loss of purchasing power among the challenges, as well as geopolitical crises and interest rate hikes. Lower global demand from markets such as China have also proved to be a hurdle. Germany's large industrial sector has been particularly damaged by the loss of cheap Russian gas imports. The gloomy outlook for Germany comes amid concerns over its status as an industry location. The German government is trying to reconcile its strict fiscal rules with the need to attract investment for its costly green transition projects. Meanwhile, the government also forecast an easing of inflation in its report from 5.9% in 2023 to 2.8% this year. Habeck, who is also Germany's vice-chancellor, said inflation has been tamed in Germany.
Well, I guess the German needs more taming of inflation. But let's look at the market. How's that looking?
Well, today, European traders have a fairly lengthy list of macro indicators to look forward to, Ini. The latest Purchasing Managers' Index figures will come in from Germany, France, and the whole of the Eurozone, as well as from Britain. It's also time for the final readings for February consumer inflation in the euro area. Over the past week, the euro and sterling outperformed the dollar and yen, and now traders are betting the European Central Bank and the Bank of England would cut interest rates later than the United States Federal Reserve. In the US, January's Federal Reserve policy meeting minutes showed that the officials had mixed views over the timing of cutting interest rates, but most members were more concerned about moving too early.
Thank you so much, Ekram, for that update. We'll do it again tomorrow. We head to the commodities market now, and our topic of interest is the cement. So our commodity of interest is the cement, and I'm sure at the mention of that word, a lot of people will sit up because in the last 6 months, the price of cement in Nigeria has gone up more than 90%. In fact, it's gone up 90.91% to about 10,500 for 150 kilogram bag in the country. And this is in spite of promises we had late last year from one of the major stakeholders right there. Well, the government has intervened and promised, or they've come to an agreement that a bag of cement will go to about 7,000, 8,000, I believe. But of course, we have not added logistics and transportation into that. So perhaps we'll go back to that 10,000 naira, if not more. But let's talk more about this. Joining us now from Victoria Island is Halima Adediran. She's an analyst with Financial Derivatives Company. Hi, Halima. Good afternoon. This surge, have we come to an end? As this agreement between the government and major stakeholders of cement, will it bring an end to this surge in price of cement?
Good afternoon. Well, the meeting between the manufacturers of cement and the government is commendable, and it could bring a reduction, but I'm not sure it will be an end in the near term, given the reason that were ruled out by the manufacturers, one of which is reduction of import duties. They're also looking at the government increasing infrastructure around the manufacturing area. That means building of more roads. So these two conditions are not likely to be met immediately. So for now, we will still see an uptick in the price of cement. And given that there is also the issue of smuggling out of the country, because our currency currently is depreciating. So our commodity is cheaper compared to what it is in the neighboring country. So smuggling activities too is really affecting the price of the commodity because it is reducing the volume of supply available in the country. So, and also we also have the issue of inefficient transportation system. So it is causing a huge gap between the price of the factory gates and at the retail end. So this, coupled with so many other factors, is really affecting the upsurge in the price of cement. And before now, I think in the beginning of quarter 4 2023, there was a fierce price war amongst manufacturers of cement. So, which gave people some hope that at least we'll see a downward drive in the price of cement. But unfortunately, surprisingly, we see that there is an uptick instead of the reverse that people were expecting. And it is because of these factors. And so this will have so many implications in the economy because the construction sector is really capital intensive and labor intensive as well. And so this will cause a delay in construction projects, and this might cause more poverty and less disposable income for people that are working in that space. So given that inflation is also at the high of almost 30%, this will squeeze Nigerians more at this period.
All right, Halima, recently a government official, I honestly can't remember who now, did talk about, I don't know if it was a threat or a suggestion of opening the borders to allow importation of cement. What impact could this have?
Okay, so in 2002, cement importation was banned in the country to encourage local production and to bring about a reduced price. So, and after that period, we saw that there were increase in investment in that space, and this brought about increased volume and stable price, so to speak. But because of the hike in price, which is very high now, the government is putting like a threat, let me put it that way. But this might not really happen because this will lead to like a shadow market. People would have to smuggle it out the more, and it will weigh down the supply of cement in the economy. So I think government should look at those options that are attached to the conditions of bringing down the price cement between the range of 7,000 and 8,000, which was agreed upon after the meeting was held on Monday. So I think they should look at those options and see the ones that can be tackled or worked on now, so that at least the range that was given, which is 7,000 to 8,000, can be actualized, if not immediately, in the near term. But for the threat, I'm not sure that's going to make things progress.
All right, Halima, thank you so much for sharing your thoughts with us this afternoon. Halima Adediran, analyst with Financial Derivatives Company.
Thank you for having me.
Let's head to South Africa, where the Southern African National Treasury is pumping 61.4 billion rands over the medium term to help alleviate the country's growing unemployment crisis. This according to the Finance Minister, Enoch Godongwana. He said this, he has also allocated 7.4 billion rand for the Presidential Employment Initiative to help get South Africans back to work and grow the economy. The allocation is set aside for the initiative for 2024-2025 by reprioritizing funding from the Unemployment Insurance Fund's Labour Activation Program and a whole lot more. Well, we'll tell you more about this in our subsequent bulletins. In Kenya, the country is still facing significant risk of debt distress despite 218.53 billion shilling, that's about $1.5 billion, new Eurobond issue that has helped to calm foreign investors' jitters over the possibility of the country defaulting on the repayment of its debut $2 billion Eurobond that's maturing in June. The Parliamentary Budget Office said that the economy is still in danger of a liquidity crisis with its key debt sustainability indicators, including debt service to revenue ratio and debt to gross domestic product ratio, headed south. And from there, we go to Uganda. That's an interesting story where some citizens in Uganda are asking the courts to declare their shilling notes invalid. And in response, the central bank of that country says it is waiting to be served with summons for over the most unusual matter that has potentially far-reaching implications. The bank faces accusations of operating illegally in the absence of its head, which is the governor, as provided for under the Constitution, with the private citizen demanding that all currency notes in circulation must be withdrawn because they are in issue unlawfully. Meanwhile, the Ugandan shilling was still unchanged on Thursday, but traders said it was still vulnerable to weakening and could cross the psychological level of 3,900 in coming days due to demand for dollars from commercial banks. Let's head to the crypto market now. Glad to have Laddie back. He does appearing and disappearing after us, but we'll manage.
Yeah.
We'll just manage.
We're working on other markets, at this time, but we're back here.
All right. I think you're the one who instigated Binance, because you were not around yesterday, and Binance made some move. On the pay-to-pay market. I think you're behind it.
It's all about regulation, at this point, and every country has their preference, when it comes to how you operate in their country. But let's look at those top headlines. Now, it's green on the screen in the market right now. We're seeing Binance facing regulatory scrutiny in Nigeria. Binance has had issues in, some, other countries there. We're seeing some blaming the P2P market for the manipulation we're seeing right there in the FX market. MicroStrategy, on the other hand, they're buying more Bitcoin at this time. They in their war chest now, they have a lot of Bitcoin, right now. They've made some profit on that. And we see Ethereum hitting $3,000 and trying to stay above it, at this point, but not convincingly above it. Let's bring in Emmanuel Anyasi now, crypto influencer and trader, joining us via Zoom. Great to have you on the show.
Yeah, good afternoon, Laddie.
Yeah, so Emmanuel, rumor has it that crypto traders and the players in the P2P market are responsible for the weakness we're seeing in the Naira right now. There's indications that there's some manipulation going on there. Tell us the true picture.
Well, I don't seem to believe that. I actually saw the news yesterday, and there was kind of glitch with my Binance opening and other crypto app opening. And I went online and said, what is happening? And I saw the news that it's like the federal government has asked the telecommunications to block this thing that crypto can be actually is the one actually contributing to the free fall of the Naira. But it's actually not true, because when you look at the Nigerian volume, in the crypto market, he discovered that probably we just have the number, but not the volume to actually drive, to actually make the Naira actually free fall. I think what is actually happening is, when you see the P2P market, it's all about demand and supply. There are merchants who actually buy from people who wants to sell, and sell to people who actually wants to buy. So those merchants, let's just say they are like BDC people. So they actually work with what is the rate at the market, at the parallel market. They actually work with the rate of the parallel market. So it's not actually about the cryptocurrency. I think mostly the truth is that people actually tends to sell more dollar, tends to even sell more dollar to Naira than people actually tend to even sell more Naira for dollar. For my own observation, I've worked with some messages, and I know if you ask any exchange, they will tell you that the volume is not actually coming from Nigeria, even when we have so much population. You can agree with me that one of the things that actually restricting the volume is poverty. Like, I used to actually encourage people come into the space with airdrop and all that. Like me, I actually came into the space with nothing in 2017, and I'm actually I can't even think about how many times I've actually used my Naira to actually buy dollar, but most times I actually sell my dollar for Naira. And if you're actually very, very conservative, if you're very, very active on the X and all that, you see that airdrops have been paying people a lot lately.
All right, so, Emmanuel. So what you're saying now is most of the trades you have noticed on the P2P market on Binance is mostly selling from USDT to Naira. Is that what you're saying?
Yes, very sure. Very, very, very sure. You can actually get You can actually ask anybody. You can actually ask any of the exchanges. And that's just the truth. Like majority of Nigerians in the crypto space, they tend to pass through the easier, the cheapest way, which actually came through airdrops and tax and working for some of these projects that is some of this crypto project that is actually coming. And if you check at it, crypto has actually contributed a lot in the Nigerian economy and for the youth especially. Many people actually do crypto. They work for companies that pay them in dollar and they just sell. So crypto, instead of government actually finding a way to actually block exchange or saying that cryptos are contributing to this, and they should actually find a way to actually get more involved into it. When CBN actually lifted the ban on bank transfer, making transactions with crypto, I was actually expecting the federal government or the CBN to actually work more on the crypto market.
Right. Well, we have some issues there with Emmanuel's video. But Emmanuel, if you're still there, okay, yeah, we're having issues there with Emmanuel. But, you know, from what he said, traders in the P2P space from Nigeria mostly go there to convert their USDT, you know, into Naira. So, there you have it. You know, we see the crypto community there. They have a different opinion, you know, when it comes to, you know, the weakness of the Naira and the contribution of P2P market. According to Emmanuel, most people that earn USDT or earn in crypto, you know, go to the P2P market to liquidate and buy Naira. So I guess they have more demand for Naira, I guess.
Yeah, well, I guess the government is leaving no stone unturned. That's what they're trying to do.
Exactly.
Checking everywhere to see. But, I mean, it would be interesting to see the Nigerian federal government work and regulators work with Binance as it's done in other countries.
Because at the end of the day, Binance has KYC. So we know who's trading there.
So we know who. Exactly. We can trace people.
Right.
Well, thank you so much, Ladi. I hope I know you won't be here tomorrow, Ladi. I wanted to say I hope you'll be here. We'll do without Ladi, but we'll do it again tomorrow. God's grace. Remember, you can always watch the program at any time on youtube.com/channelsweb. 10 a.m. I'll be back here tomorrow to give you another run round the world of business. It never gets boring because it concerns your money. Let's do it again tomorrow. I'm John McFarland.